Hey, good afternoon here from London. Good morning, America. And we're back for another cheeky live stream. The Mohawk Forex True Scalping team. And you see we're looking at the US30 today again. And today's news coming up is going to be the PPI in about 10 minutes time. The headline PPI and the core as well. So we're looking to see if we get a movement as we did similar to the CPI. Won't be as volatile as yesterday with all the markets crashed, but we will see what reaction we get, and then we'll be trading the open an hour later and again see what happens. So we're set up on US30. I've already traded cable this morning. Difficult day on cable because our trade was not valid, but we did in the end take a buy on this move up, and actually we got a nice cheeky sell here. So we've had two trades on cable. They've been nice winners, and we managed to trade DAX on the open as well, as you can see here. So which was a nice winning start to the day. So not too bad, just difficult on cable today as we expected it to be. And so we're back to normal candles now. We'll leave DAX alone. We're looking at NAS as well. NAS pretty much in the same position as US30. Got some big supply and demand zones here, look. It's been bought, it's buying now. We're going to hold off, we're going to wait for this news event. You can see they're almost synced on perfect patterns, exactly the same. Trend bar's just turned green. We've got a nice buy signal. We're just entering the golden zone, so we could have nipped in here. Neutral on the RSI, not green, so we might have a pullback, but we've only got kind of 7-8 minutes till the news. So just going to make sure I'm logged in with IC markets. Yeah, we're on the smallest lot size, which is 10 cents a pip. A margin of £134 required, which is about $134 now. I'm almost the same, 1 to 1. About 150. So again, it's like I say, the US30 indices on IC markets is the most expensive indices to scalp and trade in terms of what you must have in your account, because obviously you want to be able to, as I always say, be able to open 4 or 5 positions simultaneously, and also have 4 or 5 positions as a backup to cover your trade if it goes the wrong way, so you can get back to break even. So you know, you want to be able to handle 10 positions, possibly you're going to draw down for a bit before they come back to you. So you don't need a stupid amount, but again, I always recommend $1,000 and above is kind of where you need to be able to true scalp on a 3 minute, 1 minute, 3 minute or 5 minute kind of time frame. Below that, it's very risky. If you get drawdown, you'll get your account stopped out. So but I teach all this if you go to the website www.mohawkforex.com, and all the information is there on how to join our group and learn how to scalp that way, and practice on the demo simulator until you're ready, of course. So but yeah, after yesterday's massive drop on the market, as you can see from yesterday, things entered a bit of a range. People were buying on this demand zone here, as you can see. The market was still pushing it down every time, buy, sell during Asian session. And then during London, we had an open drop, and then we had a pullback, and again we hit the top of our fib, and we've sold off again back to pretty much where we were, and now we're back to where we were just before the close of New York yesterday. In fact, we've just pushed up off this level here, and if it wasn't around a news event, I would have definitely bought on that buy signal, but with the news event, we just don't want to be caught the wrong side of the trade. So let's plug into Bloomberg and see what they're saying as well.
For an industry of the future, ag tech uses far less natural resources, has higher yields, and
let's get people back to work.
And I just think this is part of the future of agriculture. It's happening right here in Virginia.
Just real quick, Governor, I remember speaking with you when you had your private sector hat on about
so we had the
that you were looking for, and I'm wondering
UK inflation rate earlier on, 9.9. So again, you know, it was worse expected figuratively speaking, but it was better than expected, but only just. But the core was as predicted. So inflation is still climbing, just slower. in the UK, so we're going to get a rate hike next week, no doubt, as well. Probably 0.5%, and definitely in the US it's going to happen. So today, this news result coming up now could be a confirmation of that. So we'll stick on US30. We'll see what we're going to get on this. Just let me take my line away.
We're doing it both with government-led things, but more importantly with public-private
So
partnerships.
US30 can go reverse. So we'll expect to see. We'll wait for the move before we enter anything.
Lisa, is that one step closer to asking about carried interest? Is that what you want to do with the government next?
We could have gone carried interest, but we're out of time, so you're in luck.
Governor, I know
So
we had
locked
some
in.
problems to start the interview, so we have run out of time, sir. But next time we'd love a longer conversation. Governor Glenn Youngkin there of Virginia. Governor, thank you. Great to catch up with him.
Yeah, he's a really interesting
Let's get my
person.
coffee.
Speaking to him when he was at Carlisle, he was really big on investing in infrastructure.
We didn't have time to get this in, but
Sure.
I think an important conversation with somebody straight talking like Youngkin is okay, but can you find common ground with Democrats with the American disgrace, which is child care? He wants, the usual Republican chit-chat about get people back to work. And yet we're living in the medieval age. It's like Westminster Hall. We're living in the medieval age of child care in America.
I think that it's a big issue. You want me to comment on that one?
No, I
think that,
just think
honestly,
it's tangible.
he's been very vocal about education.
We're leaving that there.
This is Galileo FX, the best rated trading robot of 2022. Galileo FX is a simple app that trades on autopilot to grow your account and avoid losses. So you can earn passive income 24/7 without looking at charts all day. Load Galileo FX on 1, 2, or even 20 charts to multiply your profits based on your personal goals and risk tolerance. Stop doing technical analysis and let Galileo FX do all the work with no human intervention. Monitor your performance from your smartphone, even when you're away from your PC. Galileo FX doesn't just trade for you, it helps you avoid painful losses. You can limit the...
Been very vocal about education.
We're leaving that there.
Let's get to the countdown. Right, coffee is good. Right.
My Forex trading screen.
2-3 minutes to go.
Short.
Didn't know where it was going. Live from London.
It's with Tom King. What do you want?
This is Bloomberg.
A lot of people still thinking we're going to go down to a kind of 3052 level on the US30, which is way down here, way down. But we're focused on just small moves, 10 pips at a time, scalping away. We're not fussed about the bigger picture, only when it comes to the data. So this is our world inside this little fib and this little time zone. That's it. That's all we're focused on as true scalpers. We're not holding. We're getting in, grabbing and leaving, and that's what it's all about. But yeah, definitely there's been a big range since that drop. An attempt to get back up and then just to push back down again. And like I say, it could go lower. The markets were so sure that interest rates were going to be, core inflation was going to be lower, and of course it wasn't. So that surprised the market, and that's why we had one of the biggest sell-offs for a long time.
Financial world on demand.
And the market struggled.
Hear from leading economists.
So this is going to be interesting to see what the PPI does. 40 seconds to go.
Live and on-demand webinars. Only from Bloomberg.
Good luck, everybody.
Start exploring to see what's moving the markets. Visit Bloomberg.com webinars.
Sure, we're logged in. Yeah, 20 seconds to go. US30. Let's see. We're going to get a push up, push down. 10 seconds.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global
The core slightly better than expected, which is worse, and it's expected on the PPI. So let's see if we get a move on here.
That's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological
Nice drop. Is it going to reverse? It's going to push down a bit more. Getting some positions away. We're done. Yes, we got sell signal as well. Perfect. Now, how many orders did I get filled there? I managed to get 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yes, 10 orders filled. And we managed to get 10, 28, 30, 40, 50, 60, 70, 80. Yeah, over $100. Brilliant in 10 seconds. Trading the smallest lot size. This is how good it can be. Well happy with that. Nice spike down. That's what you want to see. Look, there's the new spike. That's all we're bothered about. And of course we know it's going to bounce off that support zone. So will it come and retest it? May well do. But there's your result, and that's how you can do it. That was good. Nice, easy $100. Probably a bit more actually.
Elisa said it's PPI Wednesday, so we're getting some PPI data in a couple of seconds. Futures into that at 0.2% on the S&P. Futures just about pushing high. Yields higher as well by 5 basis points. With the data, here's Mike McKee.
54.
Here we go.
The numbers are just coming across for producer prices. Final demand on a month-over-month basis falls by 0.1%, and that was what was forecast. The core, though, rises by 0.4. That's more than the 0.3 that was estimated. That's ex-food and energy. With PPI, you also take out trade services, which is basically an equivalent of retailer margins, and you have a 0.2% rise, same as last month, same as forecast. So this leaves us with a final demand year over year at 8.7%. That's down from 9.8%. The core,
there's the drop.
Down from 7.6.
Beautiful.
And the core with trade services 5.6.
And say it's reverse on PPI and on CPI, so it's better than expected. Like I say, the numbers wise, but in terms of the market, it's not. It's worse than expected news because I don't want it to be higher, I want it to be lower. So there you go, 0.4, and that's why we get the drop. There's a sell signal. Is it going to push down here lower?
Just a little bit, or perhaps not quite. Mike McKee, thank you. Equity futures pushed just a little bit higher, up by 0.2%
Let's see.
on the S&P 500. Yield still higher by 5 or 6
It's going to push. It's going to bounce.
43 on a 10-year. The 2-year.
Usually I try and do 2 batches of trades, but that was such a good win. Let's just watch and see if this comes down here lower or not. That sell signal is nice to see, but I said we're on this demand zone here. People are looking to load buys in.
Should we start the countdown clock to retail sales tomorrow?
Would you like to do that?
23 hours, 58 minutes.
Let's go. You should go in the line that's circulating London right now to go and see the Queen and just count down to retail sales. They'll have no idea what you're talking about.
I could stay there for.
You can see RSI just dipping outside the zone. We'll see if we get a red trend bar. It's going to push. Looks like it wants to push.
This is really history being made, folks.
Let's wait for that sell signal again. No positions open at the moment. So we took those 10 positions. They're all nice winners.
Story about how economists become stars. Michelle Meyer is a MasterCard economics.
There you go. It's pushing down again.
A girl fell out of Boston University and everybody stopped.
I guess this fight between this demand zone and the news.
Michelle Meyer joins us now after years of
0.4. That's it for news. We've got the oil. We've got oil later on.
Michelle, let me cut to the chase. How bad is it? How bad and how persistent will the housing inflation be?
Well, thank you, Tom.
There you go. That's the result.
You know, I think the big challenge
So bad news, like you say, 7.3 estimated 7. Hence what the market's trying to push. Pound dollar again. Look, you can see the fight there. Look, it's in a range at the moment. We're set up for our New York trade later on. So I'm keeping out of that. You don't. We're in a neutral zone there.
Relative to income growth across all of those really specific metro areas. about 65% of the country is considered overvalued. So you have that coupled now with this extraordinary increase of mortgage rates, and that has created a huge shock to the housing market. So as you know, home sales have been falling steadily since the beginning of the year.
Right, multifamily to the rescue. That's what always happens in the cycle. Can multifamily come to the rescue in Nashville or Denver, never to the rescue in New York, but is multifamily, are we getting more units?
We are. We certainly are. I mean, if you look at housing starts, they're still running above what you would consider a break-even rate, particularly for multifamily. And remember the lags with multifamily.
Wants to bounce off that zone.
From the beginning of the project to completion, on average, once the construction starts. So, you know,
brilliant. Just grabbed another cheeky couple of sales there. Could me click. I got 5, 10, another $20. Another quick $20. I wanted to get my 2 batches away. That was only 4 positions. Wasn't anything amazing, but it's another green, another win. Sold at the top of that candle. No, it could be bouncing back, but we'll see. Because you've got so many people loading up buys here, look. But it's still a fight. You can see it's fighting. RSI still not into that neutral zone.
We're seeing build.
Well, I would argue that that transmission from monetary policy is quite apparent in the housing market right now, and will be increasingly in the rental market as well. You know, these are interest-sensitive sectors, and the fact that
pound dollar, yeah, just ranging, not doing anything. So we're leaving that alone until we do our trade.
Quite clear to contain prices and inflation.
There's the result on Trading View as well.
Has slowed down demand of housing, and
NAS reacted pretty much in the same way. You could have traded NAS instead. Now we're just getting a push back up. We're at 382 on the fib, so you've got to watch out. Wait for it to break into this level above 618 again, which will be the same time as the RSI goes green. If the RSI goes green outside the zone, then we're buys back up to 786. But at the moment, like I say, it's still, you know, in the neutral red. So we've got a range here fighting. It's going to want to push down up more to the rejection.
Where is this potential for an overshoot at the same time that the people who are least able to
keep watching.
Inflation are feeling all the more pain?
Yeah, I mean, look, these are certainly some of the challenges here in terms of finding that ultimate equilibrium in the economy.
See if we can get any more trades away.
You know, some real imbalances in terms of excess stimulus.
But well done on that.
And I think,
There's
you know, the adjustment is happening, but
14 positions taken.
in the interim, yes, you've seen this, you know, some push into nature renting, which is increasing demand for rentals when there's still some, you know, lag in terms of getting all that supply into the market. But it will come, and frankly, you know, one of the ways it will come in terms of normalizing inflation, normalizing particularly rental inflation, is through the demand side, in the sense of weakening the broader economy, particularly the labor market. You have a bit of an income shock, and then naturally you start to see that feed through. And that's what Fed Chair Powell, I think, has been saying quite clearly, which is that they are keenly focused on price stability and reducing inflation.
Then we're going to wait for the open.
You know, sacrificing some real growth.
This really leads to the question of how much pain needs to be inflicted on this economy, or how much pain will be inflicted on this economy based on the rate hiking cycle being priced into the market.
We're back to that range that we had before, pretty much.
Because we're not seeing it yet in some of the metrics. What's your sense of how likely or unlikely a hard landing, I hate using that, but a recession that's somewhat significant is, given the report that we got yesterday on CPI?
Well, I think the report yesterday showed two things. One is that you are seeing relief on the supply side, in that, you know, we've seen a drop in energy prices. We're starting to see some easing of goods inflation, and more should come given what you've seen from container costs coming down, supply chain issues easing. But the demand side, there's still a lot of inflation there, and the services economy is feeling that. So for the Fed, that has a lot more control over the demand side, it does give them that type of, you know, push to continue to raise interest rates to cool down the economy. And Lisa, to your point, it is taking time because the starting point was really high. You know,
So the move for the news is really over now, as you can see. And we're probably forming a nice W. Could have a nice double bottom here. Full reverse up on the open. We're into that golden zone now, so we'll avoid this zone, of course. 382618.
Like no one I've ever seen in the decades he's done this. Help us with the Glassman-Meyer consumer. How boomy is the consumer right now?
Look, from our data, we're looking at our spending pulse data for the month of August. There was an acceleration in the year-over-year growth rate of consumer spending, and that's, you know, even controlling for these movements in gas and oil.
And that's what I mean. It just came out. Needs to break that to come down lower, but the big demand zone here. Look, where everyone's tried to buy before, then come back. So you could have put a buy in there if you wanted to. You know, I'm just erring on the side of things selling still, but we'll see.
James Glassman of JP Morgan and Michelle Meyer over at MasterCard is saying all of this continuum we talk about.
Pound dollar, yeah, just right on our line, just as it was there. That's why there was no trade this morning. Look, price was right on our Asian line. There was no gap, so there was no trade. So you could just scalp that as normal for a buy, and then the pullback for the sell, and that was it on cable. And again, we just don't know if again it's sat around the New York line. There's no trade again. We need to have a 10-15 pips difference really to put the trade in. So really flat, as you can see. Not a lot of movement.
Well, the more resilient the economy, the higher inflation will remain, unless there's some sort of exogenous event to bring it down. And I think
supply side
right,
miraculous story that delivers that soft landing, and we all hope for that.
Right, exactly. Which is the reason why there is a narrow path to a soft landing, but it's the reason why people are getting bearish, because things are so resilient. Things are so good for the consumer.
And that's why we're seeing the 2-year yield through 380.
Yeah, which is just sort of shocking.
Onto retail sales.
Seeing the push up now.
Back to normal.
Yeah, they're all going to get back to normal, and we're all going to survive.
I'm going to sell. I want to sell at the top. I want to sell at 618. It pushes that high. Let's see.
The speech of the president yesterday was he looked foolish because he did not address the immediate inflation report. He could have scored major points by being presidentially optimistic and note the inflation is crushing a huge part of America.
Isn't that his comms team? What are they doing? What were they thinking about having a concert-type celebration of the Inflation Reduction Act on a morning like that?
This is a delicate moment. And he's actually done better in the polls over the past few months because of gasoline prices, and now it gets a little trickier.
379.86 on a 2-year. Coming up as we
we'll have a look at oil actually for later on. Oil, there you go.
Management looking forward to that. Zach
Corn's under $7 a bushel.
And Samir Samana is joining us from Wales as well. Where are you going with that?
I'm not. I think they're the Dow.
Again, a bit of a mess on oil, but again, it's a demand zone here. There was a nice buy. Look, just, and you could have entered it on that candle here. Look, rejection on that news again. That's why it doesn't matter what there's so much things affected by his news events. You'll get scared out if you was in a buy and suddenly it's wicked down on you. You'd be thinking that was it, and then you'd be kicking yourself because it's gone back to how it was. So that's why you either decide to get out of your trades before a news event, trade the news event, and then get back in, or just avoid the whole, hour before and after a news event.
Consumer Prices Index, it rose 9.9% last month from a year ago, a drop from 10.1% in July. That reflects an almost 7% decline in the cost of gasoline. Bank of England policymakers meet next week. They're expected to raise interest rates either by 50 or 75 basis points. Comcast is doubling its share to buyback program to $20 billion. The parent of NBC Universal is taking advantage of the shares, having lost a third of their value this year. Comcast has already
US30 is rejecting. Is it rejecting out the zone? Let's see. It's trying to fight.
Tech investor SoftBank reportedly is considering the launch of a new giant startup investment fund. According to the Wall Street Journal, it's part of a plan to rebound after the poor performance at its 2 earlier funds. SoftBank has been hit hard by the rout in tech stocks. It posted a record $23 billion loss in the quarter ending in June. And hotter than expected U.S. inflation data had caused Jeff Bezos' wealth to fall $9.8 billion yesterday.
Wow.
It was the largest plunge on the Bloomberg Billionaires Index. Elon Musk's net worth dropped by $8.4 billion. And they're not alone. The fortunes of America's richest billionaires fell by $93 billion, the ninth worst.
What do you think is happening
Crazy.
in the blockchain industry right now?
I think in the long run, DeFi wins.
Daily loss ever. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists. I'm Lisa Mateo. This is Bloomberg.
So we've got 45 minutes. We'll see if we can get any extra trades on US30 before the open. Pound dollar is definitely out of the equation. And DAX still could be possible for a buy. Again, it's set on that demand zone here. There's another one here. Here's the sell. It's going to retrace. So, but RSI is not where we need it to be. So that could just range along for a bit. So we'll keep focused on the 13. See what it's going to do in this zone here. Look. See if we can grab a few dollars on a pullback. I mean, this is going to form a second leg.
We have a unique way that we look at big
RSI 54, 53, 52.
And we ask ourselves when we're considering something 4 questions. We ask, if it's successful, can it be big and move the needle at Amazon? Is it being well served today? Do we have a differentiated approach? And do we have competence there? And if not, can we acquire quickly? If we like the answer to those questions, we'll go pursue it with a single-threaded team that isn't distracted by the rest of the business.
When it comes to the stock, it has fallen significantly. Do you think investors are missing something, or has tech just been overvalued?
I have never tried to predict what the stock's going to do. And any time I've tried to a little bit, I've been wrong. I do really believe that in the short term, the stock market tends to be a voting machine. In the long term, it tends to be a weighing machine.
Bro, and we got some cheeky trades on that. That was good. That was another 10, 20, 30, 40, another $50 there. So that will probably do us. Sorry, it was 10, 20, 30, 40. Brilliant.
Things tend to work out. I think we've had very good returns for investors, and I expect that to be true again.
The deal was the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned...
Reversing out the golden zone, you see, is what we always look for. So we jumped in as soon as I saw the price action go red, even though I'm against our main trend bar. Just tasted it'll pull back. Might bounce again on 382, but that's good.
Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income.
So it's to come back and retest our demand zone would be nice.
Retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
This is going to push down lower. That's what we want. All this is reverse trading because obviously we're green on our moving average cloud, green on our trend bar, neutral zone. This is all to do with the news. Just see if we're going to get a retest of our demand.
I think that the Fed will try and stick to this higher for longer mantra, but they're going to see a softening in the economic data, and the tightening that they're putting in today will risk overdoing it in the future, and that's probably going to result in a recession.
The risk of overdoing it with Mark Cabana, the head of US rate strategy at Bank of America Global Research, building on the work of Mike Gaper over at Bank of America. That team, they are calling for a recession in America. They got more fuel for that call off the back of a hotter than expected CPI print that took equity markets down as we started to bake in higher interest rates from this Federal Reserve beyond September, maybe even more in November and beyond. Equities this morning, good morning to you, just about positive, 0.2% on the S&P. Nothing in comparison to the move lower we saw yesterday, Tom. Down on the S&P by the most since June 2020.
Monitoring this very carefully. I'm doing it through the foreign exchange space where it's a churning dollar today. I'm watching sterling carefully. Right now joining us on a phrase
we're watching it as well.
How to invest. And the arch way to invest is to not lose money. David Rubenstein is with us, co-founder of Carlyle Group and author of the new book.
Let's have a quick look at cable as well. Yeah, it's still 115. Again, still sticking to that New York line.
Which can talk about log normal distributions and tail risk and all the other mathematical blather. The foundational issue is the how to invest, how to make money over long term, is to not lose money. How do you avoid losses in investment?
Well, if you're really investing, you're probably not going to be able to avoid losses at some point. No great investor has been able to avoid losses at some point. Even Warren Buffett has lost money on investments. So you have to be in the game and recognize if you're reasonably good at it, you'll probably make more money than you'll lose money. And what I try to do is to interview some of the best investors in the United States and talk to them about what their secrets were, how they got where they are, and what they would recommend to other people who want to be investors.
Part of this is the definition of short term. How short is short term for the different chapters of your book?
Well, of course, some investors are trading daily, but for people that do what I have typically done, which is private equity, it's a longer term investment hold, which is typically 3 to 5 years. Clearly, people like Warren Buffett are holding almost forever, but I'd say generally investors who put money to work are trying to get some kind of good rate of return somewhere between a 3 and 5 year period of time, typically in the private equity or venture capital, growth capital areas.
David, were you surprised what any of these luminaries said in terms of their investing secrets or their mantras?
Well, I don't know if I was surprised. I've known many of them over the years, and so I've really spent some time with them before. But generally what they would say is that you have to take some risks, and the great investors are basically going against conventional wisdom. The conventional wisdom will say to sell, and the great investors will say now's the time to buy, or vice versa. And the most common mistake that they all felt people make is that when the markets go up, people tend to get in. When markets go down, they tend to sell. And the great investors tend to do the opposite. When markets are in trouble, as they are now, you could argue, now is probably a pretty good time to invest. You won't see the results of your investment for 2 or 3 years if it's successful, but generally people are now really skilled investors, I think, are buying things now at the bottom of the market or close to the bottom of the market.
How has investing wisdom changed, or investing beliefs, as we've seen a complete change in the technology underpinning a lot of it, with a lot of it done more quickly, democratizing in many ways who can get in, how people can trade?
Well, it used to be investing was really something available only to the top wealthiest people in the country or in the world. Now everybody can participate and invest alongside some very good investors by going into their funds. One of the big changes is that the rate of return was always the most important thing. The highest rate of return you could legally get was what people wanted. Now people do worry about things like ESG. That was not a factor 10 or 20 years ago. Now, while ESG has been under some attack lately, there's no doubt that ESG factors are important for a lot of investors and for institutional investors as well.
David, in the next hour, we will witness a Queen of the United Kingdom with her coffin move through the door of Westminster Hall. It is an ancient, ancient edifice. It is as ancient as what you brought to America, which is a copy of the Magna Carta. Please explain your view as the one that helped the National Archives with our heritage. Please explain the reach from the time of the Magna Carta in Westminster Hall to Queen Elizabeth.
Well, the Magna Carta was designed, and there are versions of it from 1215 to 1297, to give people, generally the wealthier people at the time, not really the average person, though it later evolved, the benefits of things like trial with juries, no taxation without representation, right to habeas corpus, things like that. Interestingly, the Magna Carta became less significant in England for a while and became more significant in the United States, because when our charters were drafted for the colonies, the 13 colonies, they typically had the rights of the Magna Carta or as put into those charters. So in many ways, our Revolutionary War, which was against England, ironically, was really based on the premise that we had the rights of the Magna Carta. Many people in this country believed that they had those rights because they were guaranteed in the colonial charters. And for some period of time, the Magna Carta became much more significant in this country, really, than it did in England.
David, we see a United Kingdom with a changing of Prime Minister, and clearly from their Chancellor of the Exchequer, a growth at any cost strategy. Is there any
US30 back in the zone, watching and see what it's going to do. Break. Let's see if we can get any more, if there's going to be any more reversals.
I think the English economy or the British economy has some real challenges now, more than even the U.S. economy. I think Brexit has had some impact on Britain that probably is not as favorable as people would like. I think also the economy is not as strong as Britain would like or Europe would like. And I think the European economy is behind the U.S. right now. Inflation is probably as high as in the U.S., but the growth is much less likely to go forward than it is in the U.S. So I think the British economy has some real challenges now.
Forecasting a recession here in the UK. The Fed's not got around to doing that in the United States just yet. David, fantastic to catch up with you, sir. As always, David Rubenstein there going into the opening bell at about
Pound dollar again, still stuck to that line, so nothing happening, just sitting on our hands watching. Got 30 minutes to go to the open. Our final trades of the day. Not in any positions at the moment, but we're looking to see if we can get in another sell in the zone down to here again. We'll see. Seems to be a good level of support.
You say male from the Queen Victoria Square.
Yeah, sure.
But what does that symbolize to kids across this nation?
That is the road to Buckingham Palace.
Really?
And often what you would see, Tom, is that lined with
We need to see red on the trend bar for it to be an official kind of sell for us. This is just a micro scalp within a true scalp. Let's see if we can get anything. It's looking like it's pulling back again.
Is that the Queen will leave Buckingham Palace one final time, Tom. Make that way down the Mall.
Hey, what did we get? Yeah, we jumped in and got three. We've got 3 sells. 6, 7 and $25. That will do.
Down from Whitehall onto Westminster and to Westminster Hall.
Again, just using the smallest lot sizes.
Could take about 15 minutes, Tom, but this is going to be a lot less slower. This is going to be followed by the royal family and senior members of the royal family, and it's going to be a deeply emotional moment for this country.
And then what we will see in the unimaginable, what the press says, the British press says about the length of the lines to observe the casket.
She will lie in state until Monday morning, a few hours before the funeral service. Live from London, this is Bloomberg.
There it goes again. I think NAS is doing the same, just watching oil as well. I was just pushing up again, still on a buy.
Politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect.
How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg.
Nutrigenomics and precision nutrition is one of those rare scientific fields that overlaps with the Instagram-friendly wellness industry.
There is a lot of interest in this idea of personalized nutrition, and especially how accessible it is to the public. You can go on Google and type personalized nutrition or diet and genes, and you will find dozens of different companies that offer this nutrition precision tests.
One of those companies is Routine. Routine claims that their personalized tests stemming from sciences like nutrigenomics make their supplements different. But even with the claims from Routine, as well as dozens of other personalized nutrition companies, the science still has a long way to go.
Below 500. New candle. So let's see what this does. It's going to push down a little bit. Might be able to scalp another trade on this. Let's get rid of this zone now so everyone you can see what I mean the zone. So there you go.
Need to catch up? This is Bloomberg Wall Street Week. I'm David Weston. We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
It's knocking it out of the ballpark. It's a challenging dynamic.
Brilliant. And that was another quick 10. Yay, 11.25 actually, so that's about $13. That's one single trade. Just going ones on this because it's close. We're getting close to that open, so.
It's composable, it's transparent, it's cheaper because you're just code. You don't have all these people in this legacy infrastructure.
All weekend on Bloomberg Television and Radio. This is an extended edition of Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Live from London for our audience worldwide. Good afternoon, good afternoon. A special edition of Bloomberg Surveillance. The countdown to the open begins right now. 30 minutes away from the opening bout. Futures trying to deliver some kind of bounce after a brutal day of losses in yesterday's session. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. TK struggling to put together a bounce this morning.
Yeah, the difficult bounce was a better tape a bit ago, and then there was a real ebb to it, and it sort of claws back, but to me it's highly correlated, and it is a data dependency that sobered everybody up yesterday, shifting from SAR to soft to what kind of landing.
Hard.
And the question is, John,
Very
is
hard.
what's the next data dependent in between us and the Fed is tomorrow's retail sales.
Retail sales, Lisa, will it actually make a difference, considering everyone's on board now for 75 from this Fed next week?
It just will make a difference on the margins for the progression from there. In other words,
And there it is.
does the Fed have to stop on the
Retail sales, this is what they're talking about. This will be a good one to scalp tomorrow again.
to by design?
We've got the Fed index as well chucked in there, and we've got continuing jobless claims, which is the usual one we focus on. So retail sales might well override this. It's going to be interesting. A lot of news in a short space of time altogether. So going to be a good one. That's what they're talking about on Bloomberg, and we shall definitely scalp that.
Yeah. We're going to look forward to that right here on Bloomberg TV and radio. Futures shaping up as follows, just about positive on the S&P and on the NASDAQ too. Certainly not the story of yesterday with the S&P 500 down the most since June 2020. We're positive 0.2 on the S&P, on the NASDAQ up by about a third of 1%. Lisa's been all over the bond market, quite rightly. It's not just about 10-year yields higher. It's about a 2-year yield that is much, much higher. Up 4 basis points, and briefly this morning through 380. At the moment, 379.65. Mike McKee's got a lot to say. Mike McKee, we need to talk about the data yesterday, this morning, and tomorrow.
Yeah, John, take a look at what we saw this morning from the producer price index, and you might think things are not all that bad because producer prices on a headline basis fell 0.1%, exactly as we had anticipated. But it was the core rate, once again, that is a little bit higher than had been expected. We see it come in at a 0.4 gain, up from a 0.3 gain the month before. But it really just piles on to the whole headline CPI, core CPI story from yesterday that you guys were just talking about. If you look at what's happening with CPI, there is one line that just should scare everybody, and that's the number of categories that are seeing inflation above 4%. That's the purple line there. That is 60% of the categories in the CPI are seeing inflation above 40%, and that white line is the number of categories that are moving towards zero, and that's getting smaller. So you do see, as you guys were saying, you do see this Fed probabilities move up. We've now priced in for March 4.3, almost 4.4%. So you can see the bottom there where we're going next month, or this month rather, next week, and then where we go from there. I just have to conclude by sort of pointing out everybody has an opinion about what is going to happen. Larry Summers said the Fed needs to cut by 1%. Jeff Gundlach said raised by 1%. Jeff Gundlach said they need to raise only 25 because they're going too far. And Elon Musk says they should cut 25. So who's the Fed going to believe?
Mike, frame retail tomorrow, and I know there's an inflation issue there. With the enthusiasm for the consumer, I hear from Michelle Meyer at MasterCard, from James Glassman at Citigroup and others, that all this talk of Fed and the financialization and the money side of the business buttresses up
US30 again, still in that range now, just hanging on, waiting for the open now. It's not really going to do much apart from bounce up and down in this kind of golden zone waiting for the break. You can put a level across 236, level 618, and that's your breakout. You're waiting for that breakout to happen.
And do people want to buy goods instead of services? Now, we do have this retail sales report encompassing the back-to-school season, so there might be some news there. But also housing collapsing. We saw another drop in mortgage applications today. And so what's happening with furniture, with appliances, building materials? Are those going down with the rest of housing? It'd be interesting to see this tomorrow.
Hey, Mike. Thank you. Mike McKee there, breaking down some of the data. Tom, Lisa, Mike Gaper of Bank of America out just moments ago. Lisa is now looking for 75 next week. There was a lean towards 75, away from 50, but 75 is their number. 4% on Fed funds by year end. That has quickly become consensus, hasn't it?
And that is a game changer from where we were a couple of months ago. The question is if they're going to hold it there, right? I mean, basically the Fed officials have said, we're not going to cut rates next year. Stop thinking that, stop pricing that in. If they hold rates at 4%, to Tom's point, can the economy withstand that, given the amount of debt in the economy, given how much people have gotten used to zero rates?
I would suggest you will clear out the zombie companies. A good part of the economy will withstand it. We've had a zombieization. Is that a word, John? We've had a zombieization. We'll make it a word right now. It's vocabulary. There's been a zombieification of the American economy, and we're going to clear it out at those rates.
Raises the question why credit's been so resilient in the face of some of this. Zach Griffiths joins us now, senior investment grade strategist at Credit Sites. Zach, can I begin with high yield and not investment grade? And can I ask you why you're seeing the signs of resilience in that part of credit that perhaps is surprising some people?
It is surprising, Jonathan, when you think about the move in risk markets broadly yesterday, and to see spreads hanging in relatively well. And to us, we think that there is a lot of bad news priced in, and we recently looked at the wall of maturities coming up, and you're just not seeing a lot of maturities that are going to need to be refinanced at these higher rates in the near term. So from a fundamental perspective, we think there's a lot more flexibility for some of these high yield issuers, the higher rated high yield issuers than we've had in some past cycles that aren't going to have to absorb these higher borrowing costs in the near term. And it's really going to come down to what we were talking about earlier with the consumer. Is it as resilient? Can it remain buoyant and keep earnings buoyant over the next couple of
Again, rejected off that 618 level.
I think there's a decent chance, although our base
Just
case
a perfect range before the open, and we're going to get a big move.
Zach, I want to double down on this and really get you to explain, because we heard something similar from Wei Li, that a slowdown was already being priced into credit spreads, even as you have the like of JP Morgan's Bob Michael coming out and saying, actually, they've got a lot more to widen. They have to recognize the pain that stocks are starting to price in on the margins and moves like what we saw yesterday. So what kind of slowdown are credit spreads currently implying?
I think you're seeing an implication of something south of potential GDP, at least. I'm not quite sure that you can say a recession is priced in yet. And we're not calling for a recession. We think that you're going to see a growth slowdown when you have the Fed tightening rates like this. You have the 10-year real yield moving as high as 1%. That's certainly going to have an impact on the economy, but it's tough to balance just how much of the fiscal and monetary stimulus we've had over the past couple of years is still floating around in the economy. We still see indications that there's money to be put to work. You certainly had a big reopening of the investment-grade credit market after the Labor Day holiday. And not to point to something that we've been talking about for, it seems like, months, but all of the cash on
We've
the
got 20 minutes to
the
go.
Fed's repo facility. So I do think that there are some counterbalancing factors. I think there's a slowdown priced in. It's hard to say exactly how much at this stage.
How long would rates have to stay high before it became a problem? And I say this with respect to what you were saying about the maturity wall, how it's going to take a number of years before some of these companies actually have to refinance. What's the time that they have, the breathing room?
I think that's about a year, maybe a year and a half. And if you have rates remaining high or moving even higher, still that's going to be a problem, because you're obviously not going to wait up until the very end as these maturities come due. They get refied a certain amount of time ahead of the actual maturities. And so when you think about if the Fed were to take the policy rate all the way up to 4.5%, which seems very possible to us, and hold it there for something like a whole year, which the market is certainly not priced for, I think that's going to cause problems for the economy and for credit.
Zach, at credit sites, you people have the pulse of what corporations are doing. I see corporations that are underdebted, particularly quality corporations. As rates go up, what kind of sweat do CFOs have? Are they breaking out a cold sweat because they're saying issue now, or do they pull it in?
I don't think the cold sweat is here yet, Tom. And again, it kind of comes down to this story that maturities are not significant in the next year or two because of all of the opportunistic refinancing at very low rates that we've had over the past couple of years. So again, it gives these corporations, especially higher rated ones, a lot more flexibility coming into a time of economic headwinds and monetary policy headwinds.
Are you monitoring that they're using debt issuance simply for equity retirement, equity share buyback?
That's definitely something that we monitor, and is a cause for concern if there is too much issuance to simply do share buybacks. But I think that given the clarity, at least around tightening, perhaps not the exact degree, balance sheets are being shored up, and some of those considerations are being taken a bit more or less lightly, I suppose would be the way to put it. And so that's not something that is keeping us up at night just yet, but definitely factors into our overall outlook.
See how diplomatic he was on that?
I think he's been very
diplomatic.
diplomatic.
Absolutely nailed that.
He's got a new seat, so he's being very diplomatic.
He just nailed that. Zach nailed that.
Hey, Zach, congratulations on the new seat. It's good to catch up, sir. Zach Griffiths there.
Thank you.
US30 still in the same
On
position.
the edge of constructive on the credit market there, Bramo, would you say? On the edge of constructive?
Certainly more constructive than a number of people who think that credit spreads still need to widen. It kind of goes back to the theme that we've been talking about all morning, which is just how deep is the slowdown that you have to expect to get inflation under control. And, well, that's what equity seemed to suggest yesterday. But
that's what John suggested.
Yeah, he was clearly just putting that out there.
You know he's going to join us in about 20 minutes. Oksana Aronoff of JP Morgan. I'm guessing Oksana is not constructive on this credit market.
I would guess not. And I'm curious what she has to say about some of these other issues that people are raising, such as fundamentals that look pretty good, the fact that they don't have necessarily a maturity wall. And this was the other point that Zach mentioned. There still is so much liquidity in the system that hasn't yet been drained. Does this perhaps be the place that we talk about quantitative tightening?
QT.
Yeah.
QT.
Yes, you know where I'm going with this.
So if you compare late 18 to now, and we've touched on this a few times over the year, and I know we did it earlier this morning as well, the biggest difference between now and late 2018 is that it's worse. Not that it's better, because we don't have a central bank put anymore.
Correct. and you also have the quantitative tightening that's accelerating. So when people say, well, they're still looking to buy things, well, yes, they are, because we don't have necessarily the withdrawal of liquidity yet. When that starts to kick in, does the conversation start to change?
How long before we start talking about the Fed pivot again? based on a jobs market that's okay, a payrolls report that looks like Goldilocks, and
week and a half before
moves on again.
Well,
Chairman Powell's going to have to read the same speech twice, 3, 4 times. We've mentioned that a few times too. Futures up 1/3 of 1% on the S&P, on the Nasdaq up 0.4 of 1%, on a Russell up 0.2 of 1%. We've talked about yields climbing, discussed that all morning. On a 10-year, a 2-year, briefly through 380 at one point this morning.
We've got 15 minutes to go, everybody. Like I say, there's no more news for today, apart from the oil, which we'll have a look at later on.
If you're on radio right now, you're missing out. Glorious day developing in London as the Queen's coffin is set to move from Buckingham Palace to Westminster Hall. Guiding us through that, Lizzie Burden and Guy Johnson in just a moment. Live from London.
Wicked.
17 minutes away from
God
the
bless her.
in New York. This is Bloomberg.
AI is the chance of humankind to really understand itself. How much of that is true? How confident? Did you actually overachieve? Did you, back then realize that we would be using AI in many different jobs? Was it slower or faster than you thought at the time?
I think if I had a 35 or 40 year prediction task, I would have been.
Okay, but last moving away from the NY line just, that's pretty good. Ready for later on if we get another sell. 13 pips, that's good.
Very minimal improvements.
So we don't enter a trade till we get to our line, and then we'll see which direction we're going to go in. But at the moment it's looking like a good positive push up. We can just put the fib on there. Like you see, we're top of the fib at the moment. Last buy signal was there, so this could well just mess around on the line. So again, there might not be a trade on this, we'll see.
Intelligence is by learning what it is not. If we
US30 just sat like a spring waiting.
As what makes us unique in our human intelligence, then now we can rule out many things, because AI or machine learning has become so good at so many things that
literally there's no volume at all, as you'd expect. 10 minutes to go.
Power, policy, politics, from the White House to the Hill. Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect.
How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg.
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
covers the world like Bloomberg.
We have to get interest rates higher and bring inflation back to our target.
33 million people have been affected by this flooding in the zone.
Disruption is the whole point of a strike.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. When U.S. inflation numbers are released,
A stunning inflation report.
Bloomberg brings you crucial data at terminal speed.
Core rises 0.6%. That is double last month.
And instant expert analysis.
There goes Goldilocks.
Republicans are really going to harp on that. This is about a narrative shift in markets.
There clearly isn't going to be a pivot anytime soon.
Sooner or later, they're going to make a policy mistake.
Ouch for America, but double ouch the rest of the world.
Nobody covers the economy like Bloomberg, your global business authority.
Ten minutes to go, and it's been a boring 45 minutes. That's the downside if you sit and watch your charts and there's just no trades to take. We're just waiting for this open, final trades of the day, and then we're done.
Manufacturing's good, so I think it's.
And sometimes that's what happens.
No, I'm not.
President Biden brushing off inflation concerns after an upside surprise at the same time. For more, down in DC, Bloomberg's Anne-Marie. AMH, let's start there. How cumbersome a lot of people thought that was just yesterday. Clumsy, almost, to be looking at inflation where it was, markets with what markets were doing, and the message that we received from the White House at the same time.
Yeah, it was quite awkward, and Greg Valliere leads his note with it, calling it tone deaf, saying rarely have we seen such a tone deaf day in this city than yesterday as markets were crashing. The president, with hundreds of people, were celebrating the, quote, Inflation Reduction Act. You had James Taylor singing Fire, Rain and Fire, and at the same time, there was no mention at all of the inflation data that had just come out that morning, which was worse than expected. So for many, it was an awkward moment. Even someone said to me, did anyone look at the calendar to match up that you were going to get this inflation data and have this other celebration? So that was quite awkward. And then the president had said later in the day when he went to Delaware to vote that he wasn't worried about yesterday's print.
And my most depressing part of this trip, Anne-Marie, is knowing that you're not sure if it's fire and rain or rain and fire for James Taylor. I can tell you that when that song broke, I was at the University of Colorado, thunderstruck of what James Taylor did with his left hand on a guitar. Why was James Taylor at this event? What is the messaging? The president, and John mentioned this earlier.
You love it. Biden celebrates economy, skips the inflation. Yeah, we'll be all right.
Dragged the songwriter from Martha's Vineyard into an event at your White House.
Yeah, and what's interesting, and I think given the fact that I just stumbled on his song there, you can show that the administration wasn't exactly going after the youth vote with this one, but it really has to do with his moves on climate. And he spoke about that, the fact of climate change, and that was his big message as he was giving this performance, that he wanted to make sure there was this legislation to enact big money going towards climate change. The president is also going to take that message today to Detroit at the auto show. He's going to be talking about electric vehicles and these tax breaks that can go to EVs. And this is, you know, part of their transformation of the energy crisis. Another kind of awkward moment at the same time. The White House's biggest metric right now in the economy has to be gas prices. That's what Ron Klain was tweeting about this morning. It's what the White House has been tweeting about for weeks. Because right now it's
getting ready for the open.
The midterm elections than it was at the peak in June.
I'll go one step further.
7 minutes to go.
You've never heard the song?
Never heard the song.
I'm less embarrassed now.
Not big on this, sure.
I'll sing.
Oh, I look forward to that.
In the break.
Anne-Marie, down in DC. AMH, thank you. Like a TK kind of song, or like a good voice?
Do you want me to do it?
Sure.
No. Thanks. Let's skip that one.
We've got some special team coverage to go to right now with Bloomberg's Guy Johnson in London and Lizzie Burden at Abington Green. Let's start with you, Guy. What we're about to see in about 30 seconds' time as these Palace gates open here in London.
Here we go.
Due to start any second now, 22 minutes past. We are 21 minutes past. We're about to be 22 minutes past. You can see the pictures coming from Buckingham Palace. A procession that will take the Queen's body to Westminster Hall. There will be a ceremony there that will last around 20 minutes time, John. And after that, at 5 p.m. this evening, the gates will open and people will be allowed to pay their respects as the Queen lies in state. Some suggestion that the queue could be reaching up to 10 miles long. They're preparing for 5. It could be as long as 10. The British public want to pay their respects.
Lizzie, you've been watching the whole scene. Lizzie, what's your sense of how deep some of these lines are, of how much the crowds have been assembling?
Well, they've been queuing for days. They've been queuing overnight, despite the rain, despite the warnings of 30-hour-long queues. But people are jovial in the queues. They seem to be making friends with each other, asking, just hold my spot so that I can go and grab some food. They're just desperate to pay their respects, show their affection for the Queen. I think it's poignant to remember Boris Johnson's tribute to who he called Elizabeth the Great. It's unlikely that we'll ever see an outpouring of national grief like this, or that we have seen one before, or that you would have a British monarch reign for 70 years in our lifetimes again. This really is history.
Guy Johnson, in the mourning that we've seen the last number of days, we also have myth building going on. It is about a united kingdom, including King Charles yesterday in Northern Ireland. That myth making is always at tension, and in Westminster Hall, we've seen that. The judiciary history there.
US30 again, waiting. We'll watch. 5 minutes to go.
Is this nation around the imagery that King Charles is trying to construct?
He is building on his mother's legacy. He clearly wants to use that legacy to launch his own reign. Understandably, it is a long and storied history that Queen Elizabeth has been able to generate, and a lot of goodwill goes with it. I don't know yet, Tom. It's too early to tell. We will see what happens ultimately as this story develops, how he handles himself, not only over the first few weeks, but over the first few months and years, I think will be really significant here. At the moment, we are still in the afterglow of the Elizabethan era. We don't know what comes next. That is the challenge. That must be shaped. And I think that is going to be a difficult job for the new king to achieve. I think it's going to be a difficult job to generate the same kind of love and enthusiasm that the Queen, whose casket you see there, has been able to produce.
The King's Royal Troop, horse artillery, taking the Queen's coffin down the Mall, up towards Horse Guards Parade, and then onto Whitehall Guy, and then from there onto Westminster Hall. Guy, now typically this would take, what, 15 minutes to walk? I imagine this procession is going to take a whole lot longer.
Absolutely. That is a gun carriage from the Royal Horse Artillery. The Royal Horse Artillery, I think 7RHA, will also be firing a shot for every minute that it takes. I think they'll probably be firing a number of rounds. I think this is going to be a slow process, a process that is a recognition of her legacy. There are people that want to see her. This is about pomp and circumstance. It's about legacy. It's about wanting to show our appreciation, and that is going to be measured in some ways in time here, John. This is a long drawn-out process that we are going through here right now. Since the news of the Queen's death to her funeral, it is a long drawn-out process, and that is a recognition of her impact, not only on this country, but the world.
Sad. So let's focus and see. We've got 1 minute 39 seconds to go to the open. Good luck, everybody. Let's do our final trades of the day. Let's see what we can scalp. I'm saying today we've been up, we're up best part 20%, so that's pretty good, pretty good. 48 seconds left. Just make sure again we're logged in. Always double check you're logged in, you're looking at the right thing, you've got the right lot size. Always important.
I'm going to be watching retail earnings from both Home Depot and Walmart.
Then surveillance for in-depth analysis.
Alongside Tom Keane and Lisa Abrambitz, I'm Jonathan Ferro.
Across the board, these are good numbers.
The big headline there is reaffirming the outlook.
How much does this give faith that you can get some sort of resurgence in consumer spending?
Bloomberg surveillance.
7 seconds left.
Be ahead of the game.
Everyone you meet in Port Harcourt has stories about what they call black soot caused by the
There we go, there's the open. Let's see. We're green on the trend bar, it's a nice push up.
Finding of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes, have to give way to oil wells. And no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month.
Waiting for that move.
Years now, we are dying slowly but surely, and our lifespan is reducing every day.
Excellent, we've got a couple of nice positions there we did. We got another $50. Just did 2 positions on that as it was waving around a bit, but that was a nice one. Let's see, it's waiting to see if we get a sell signal. Push this down a bit more for us.
Kind of sitting in an armchair type basis. Here it is driving a plan of how we can best maximize shareholder return.
Chief Future Officer, today on Bloomberg. Brought to you by Workday. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web. This is Bloomberg.
Beautiful, there's the sell signal. Come on, keep that sell signal there. Should be selling.
They're not listening.
We're done.
No, come on.
Come on,
Carry on singing.
No, it's
you
good.
can't
It's fine.
start seconds before
Look
we
at
come
that.
back.
Retest that zone.
Yeah, just a little game. Come on, keep going.
You're not going to sing us into the opening bell.
Come on,
Unbelievable. Up a third of 1% on the S&P. Nasdaq futures up 0.4%. Big move lower. Closed almost at the lows in yesterday's session. Tiny bounce. In the FX market, euro just a little bit stronger, up by 0.2%. Stronger against the US dollar, and yields higher by 3 basis points on a 10-year. 343.72. Tuesday.
Another $40 just closed out.
You guys have been on the 2-year today, and you're correct on a standard deviation basis. I want to point out the VIX didn't pop to a 30, 31, 32. The VIX was like a 27-ish, and that's not, as I mentioned earlier, we reset. We did not collapse.
Am I getting a song?
Got another 2.
There we go. That was beautiful. That's enough. That's special.
Just going in 2s on this one because I know it's at the bottom, but keep banging away. Scalping.
Much better that you're singing than me, Lisa, for sure. And I can't believe, John, that you've never heard that song. As for stocks, we do, of course, have a little bit of a rebound after the worst day since March of 2020 for the NASDAQ 100. That has everything to do with the fact that your Apples and Microsofts are higher on the day after the worst day for Microsoft and Apple, going all the way back to September of 2020 on that surge in yields. Occidental Petroleum popping 1.2% up with oil. So it's a little bit of a broad-based rally. You also have your banks higher. JP Morgan had been up a little bit more earlier with yields higher. We would be remiss, though, if we didn't talk about the railroads, because, of course, there is the possibility of a strike if a deal is not struck by Friday.
Brilliant. We just got another 5 on that. Again, just another $20, $30, but we're over 100 for the open, so it's perfect. Beautiful sell signal. This is what I like about our system and set up when those signals kick in on the opens and news events. They're 90% accurate. I mean, probably 100%. I don't know. You know, it's just when they flash up the opposite direction, it's good to go. That is a good.
Brutal, Tom. Yes, indeed. The likes of the home builders, consumer discretionary, technology, all the big laggards on the day yesterday. Although this morning they are seeing the smallest of rebounds. Still very, very small.
We just got some more. There we go. Which that should do us. We got another 1, 2, 3, 4, 5, 6 positions there, and that was about another $80 or so. Just going to post the results in the group so everyone can see. All you got to do is enter the cells when you see the wick exposed, pushing down. Look at that, perfect.
Elevated in May of 2021, and for obvious reasons. The home builder decline of about 21% since that time period goes hand in hand with the idea that if inflation is high, the Fed has to raise rates to rein it in. That means mortgage rates go higher and housing demand cools. We've already seen that borne out in the economic data. And for consumer discretionary and tech stocks, we know that that is because a lot of those stocks command higher multiples. And when you command a higher multiple and rates are rising, that value of earnings going forward that so much of your price is based on is devalued, which is why we've seen a lot of these stocks coming back down to earth. And of course, that is a higher rate story.
Is it going to push up the opposite way?
So much work done in treasuries on a year-to-date basis, specifically at the short end, with the 2-year yield up 300 basis points or more.
Yes, we did. Yay, excellent. And we got some buys there. We got 1, 2, 3, 4, 5, 6 buys there, and that was another $20, $25 on the buy. This is proper true scalping we're going for now. Why did I buy? Because we're pushing up out of our zone, as you can see. And RSI just gone back in the neutral. Not saying this is a permanent buy, this is just a rejection. Just the open rejection. The sell was official as the open move. But if you practice your true scalping, you can just take that one candle, the rejection, bag some pips off it. And that's all I did. It's a big demand zone, as you can see, look.
How much they did over, say, 3 years, and how much they've done in 6 months.
Front loading, right? But when do we see the actual effects, and how long does it take to trickle into the economy as well?
Well, we've asked the question, haven't we? Front loading or just delayed and catch up?
What was it? Christine Lagarde? Who was that?
Yes,
Jim Bianco?
That was Jim Bianco.
That was brutal.
Bianco Research. You're going to play nice today. You're going to play nice today.
I just thought what Jim Bianco said was brutal.
I agree. Brutal's the word of the day. JP Morgan's Oksana Aronoff joins us now, alongside Samir Samana,
both brutal.
Global Market Strategist at
I'm in 382.
Investment Institute. Oksana, let's go first to you. Are you seeing any value in this market yet?
Well, first of all, let's level set. Tom mentioned the performance of bonds year to date, and for the global aggregate, the Barclays Global aggregate, bonds are right up there with equities. Equities in the U.S. down 17%, at 17.5%, and global bonds down.
Pushing back up again into that zone. Beautiful.
Possibly expected.
So a quick look at cable.
Of course, earlier this year have been very assertive.
Cable just ranging along our line, so there's probably no trade there. We'll have to wait and see. 20 minutes to go.
Mantra out there, at least as it relates to credit, is that, oh, the maturity wall is still out there. It's not kind of breathing down anyone's neck. However, it's important to remember that half of all high-yield maturities occur about 2 years before that maturity wall materializes. So happy to talk more about that, but obviously as stress continues to make its way through...
Back to US30, and we're going to get a rejection. Watch it push.
See some of that stress, particularly in the
0500.
where we are seeing elevated defaults and downgrades. We're going to continue to see now the credit market.
Nice rejection out of that demand zone. Beautiful.
I'm going to suggest, Oksana, this is original territory, to use the all-time cliche. When we break
Let's see if we get any pullback on that. We did. It got in at the top of that wick, and we got another 10, 20, 30, 40. Oh yeah, we got another $50. Brilliant. Again, just on that sell. Cheeky true scalping, that's what it's all about. So that's about 15-20 positions. We're done on the open, I think, today. We can see if we get another move on it, but that just shows you what you can do. I upped my lot size to 2 on that one, just for a cheeky move. Now drop back down to 1 again. I don't usually like doing any of that, so there we go. I'm just going to publish all the results there.
Credit markets are still pricing well below any sort of recession, and we are increasingly staring at, if not already in,
done.
recession.
And like you see now, it's pushing up again. But as soon as you see that, you get to the top like now, then you can enter a quick sell, bang, and pull out. That's what. There you go, and there's your profit out. You just see that candle. That's what you got to do.
Yes, they have remained strong in Q2.
Lock in those profits.
Which of course benefits from lower energy prices. You see that those profit margins have actually come in at negative 1% quarter over quarter and minus almost 6% year over year for the rest of the lower rated market. And they're led by lower profit margins in retail, in healthcare, in food. So all the areas.
Trend bar's now green. We haven't got a buy signal yet, and we're going to get a rejection out of the 618 zone.
Margins will continue to experience problems, and we will continue to see it reflected in spreads.
So, Oksana, next time we have Zach Griffiths on, we'll bring you on and we'll have you together so we can really get a tit for tax. It seems like you guys have opposing views. Samir Samana, I'd love to get your take on this because we heard earlier in the program from Zach Griffiths, who is of Credit Sites, who is saying that
Brilliant, we closed out there.
a significant slowdown,
And we did. We got some more on that beautiful red candle rejection. We got another 6, 7, 4, 3. So yeah. All small trades, doesn't matter. We're really done now. Just caught that beautiful red candle rejection from the golden zone. When the fib's on it, look at that. 618, bang, push down, perfect. Got to grab that between there and there. A lot of pips. Pushing back down again now, look. Wait for the RSI. If you get a red trend bar now, we're going down lower.
Which should mean the slowdown, the recession probably is in the first half of next year, which is what we
Let's see.
time. Then credit probably does have one more shoe to drop. Now that being said, there are emerging pockets of opportunity. I think what's happened with commodities, the fact that oil was, kind of in the low 80s not that long ago, commodities. We like energy equities, those continue to be a very small percentage of the overall benchmark. We think there's some attractiveness there, but we would continue to fade, consumer discretionary.
Let's wait and see if we get any more.
Both rate sensitive and haven't caught up to where the consumer's health is going.
Given the carnage that Tom and Oksana have been talking about within the total return index and bonds, where do bonds fit in your portfolio, given what we've seen with 60-40 this year?
So we really like the short end, right? You're getting paid to kind of, sit and kind of clip coupons in the short end. We also entered the year most unfavorable on long-term fixed income. We took the opportunity earlier in the year around 3.5 to go to neutral. That's probably a good spot for now. That being said, if you do get overshoots to kind of the 4% area or maybe even higher, I think we would see that as kind of a longer-term opportunity to kind of have that ballast in our portfolios because, again, we do believe the Fed will eventually get inflation back down to that 2% target.
Samir, let me just ask you a question on that. If they do get inflation back down to that 2% target, what matters here is time horizon and damage done. Over what time horizon and how much damage will they do to this labour market in between?
So I think it's going to take a lot of time. I mean, you could easily bleed into 23, maybe even 24, and there probably is a good bit of damage done to the labor market. I mean, unfortunately, the Fed's kind of been
Got a buy signal now. Can load those buys in. Brilliant. And we just got another $40, $50. Excellent. I think we're done. That is going to be it.
Very cautious on equities, right? We're underweight small, we're underweight emerging markets, we're underweight developed markets.
Perfect. That's it. You've got to be done. 15 minutes. Don't want to be trading any more than that. Not on the open.
I think we'll get some opportunities to get a little bit more aggressive, but I think we're on the front end of this.
Samir Samana, thank you, sir. It's good to catch up with you. Oksana Aronoff is going to stick with us for a final word. Lisa, that was bearish, and it was kind of the bearish tone we heard from Max Kettner of HSBC when we started the program first thing this morning.
So well done, everybody. That is it. 27 trades and all green. So we're going to end on a green streak. Like I say, we'll be back later on to trade the oil news as well. And that's it. We'll see if we get a rejection from here. We'll keep watching. That was great. 27 positions. Taken all green.
It's different than the other. With that said, the way we closed yesterday afternoon was ugly. Ugly. It was brutal. It was brutal. Yeah, it's no question about it. Remember, James Taylor was in America. Tell me lies, get the inflation call right, place Roy.
Did you play the guitar?
No, I did not. He played the guitar.
Brilliant. So we'll watch this push up, and yeah, we will be back again next week for some more true scalping. And like I say, if you want to learn how to do this, then it's www.mohawkforex.com, and that's it. You just want to be doing 15 minutes to half an hour London, 50 minutes to half an hour New York, and then the news events, and that is it. True scalping, in and out, no messing around. I've hung around just for the live stream today, but use that 45 minutes you wouldn't do anything. There was nothing there to trade, so a great day's trading. And yeah, we're going to enjoy what's left of the day. But any questions, like I say, just go to the website. There's a form on there. And yeah, hopefully you lot, I will see you all on the next live stream. So until then, trade safe, take care, and see you soon.